One. What's going on, everybody? Matt, the Lumberjack Landlord, here with a new guest, the famous Dollar Bill, Wild Bill, Bill Rapp from Houston, Texas. You guys not have heard of him yet, but that's just a formality because we wanted to spend some time with Bill. Part of this series is reaching out to people that are doing it right, that understand the market, that understand their market, they have expertise in their local market. And we just want to continue to bring you guys great guests that we believe are doing it right. And that means that you can learn something from them, i.e., doing it the right way and listen to some of the things that are going on in their market. So, Bill, welcome, buddy. Good to see you.
Yeah, thanks for having me, man.
Oh, man, my
Or
pleasure.
should
My
I call
pleasure.
you Lumberjack Landlord?
Yeah,
You're
Matt's fine.
bearded,
Yeah,
fantastic creature.
yeah, it's really it's interesting. You know, the how that occurred was I worked in tech and I went into an office and I was wearing plaid. And they're like, "What do you think you are, a lumberjack?" And I was like, "Yeah, what about it?"
So my,
Well,
my company is called Viking Enterprise, and that's all because I was getting a massage one day, and she's like, "You have legs that are like a Viking," and that just stuck with me. So we're aligned on that.
see, and people think that there's like a lot of thought that goes into naming these things. There isn't. There isn't. If that's what's stopping you from doing a YouTube channel, it's a passing thought that is the title of your channel. I promise. It's not anything brilliant or contrived. But yeah, so I mean, the reason I wanted to have you on is obviously there's a lot shifting in this world today. There's a lot shifting in the commercial real estate world specifically. And so I just wanted to, first of all, kind of introduce yourself to the Lumberjackians that are out there. They're, 11,000 subscribers strong and a couple 100,000 views a month. But just wanted to share your story with them. And so kind of walk me through a little bit, who you are, what you've done, and then we'll kind of just take the conversation from there.
Okay, well, sounds good. Appreciate the floor, and yeah,
Sure.
I think the easiest way to explain this and what I do is I really look out for people, try to care for people. I'm an older brother, come from a little bit larger family, and we moved around quite a bit when we were younger. So we're oil and gas. So it was like 3 years here, 3 years there. You're
Mm-hmm.
always meeting and re-meeting people, which ends up being good for sales, but it also really kind of taught me to look after my brothers and sisters and kind of keep the community going. And that's what I try to bring for my clients too. So
Yeah.
but yeah, I first got into mortgage lending back in 2002.
Okay.
And come 2008, before everything happened, I was like, you know what? I should get my real estate license. And in May, I got it. And in August, boom. But, a lot of lessons have been just figuring things out the hard way through making mistakes and trying to serve my clients to the best ability. And you know what? You really fall forward and pick up momentum that way. So, but I've got an extensive background in financing as well as real estate. I kind of shifted over into commercial in 2013, and I really haven't looked back since. And at real high level, that's me, man.
That's awesome. So one of the things that we always talk about with our audience is we want guys that have not been in this for a minute. One of the things that was appealing about, doing this video series was not getting guys that have done it for a whopping, 24 months and have never seen or done any transactions before that because, you got into it right around the dot-com bomb, right after the dot-coms blew up. You made it through the great financial crisis. Like you said, I was joke with people. I said, in August of that year, I had 8 paying tenants. In September, I had 3. And by October, I had 1. And so I was going to work every single day, working to basically just keep the machine going and keep paying the bills. But one of the things that we all learned, I think, in that time was you live on as little as you possibly can. Everything you try and make is grassroots. You create a lot of relationships, because you never know when you can be of help to somebody or potentially that you can then reach out when you have a question regarding, whatever it is, whether it's a deal or deal structure or even finding a deal. Some of the weirdest, you find deals some of the weirdest ways. So, as you're in this, kind of commercial journey, walk us through the kind of like last couple of years. Cause, on the resi or on the mixed use side, all we hear is sky is falling, all commercials blowing up. And we're lucky that we have even 7 renters in all the businesses in all of Houston. And so walk me through that a little bit, kind of what the world looks like today. Have we come down? Is there another shoe to drop? Kind of walk me through what you're seeing kind of in your day to day there.
Yeah, what we're seeing right now is we're seeing a lot of sales, and it's also mortgage financing activity picking back up in commercial real estate sectors. Everybody was real down on office for a long, long time, and I think we're kind of hit the bottom and starting to climb back up.
Okay.
And I think that's true for a lot of the sectors. In my local area, Katy, retail happens to be probably retail and industrial, the two biggest components that I see, because there's a lot of neighborhoods and shopping needs, as well as people who work from home and need warehousing and all that. So that's really on a high level. That's my market. Multifamily's still around, doing strong. I think there's always still a little bit of a disconnect between what the sellers they want 2020 pricing for what they can sell, and buyers want to pay what today is, and we're still trying to find that happy medium. But and there's been a lot of leasing activity too over the past time, because a lot of people are just trying to kick the can down the road. Maybe the valuations are correct, and I think we're really getting back to the equilibrium in the market. So all things are moving forward well, man.
Are you seeing, so one of the things that, again, a lot of there's a company that I just trash constantly called Reventure Consulting because they're just constantly out there talking about how it's the end of the world. And he's been doing it for 5 years. We just haven't seen the blip yet. And so he's going to these like epicenters in, Florida and things like that, where like this person took $100,000 price cut on their house. I mean, not really, because they bought it 5 years ago for 200. Now they're trying to sell it for five, and they knocked it down to four. And you think you're acting like they're losing money, and they're not. They're still going to make a $200,000 profit. Is that the same type of stuff that you're seeing on the commercial side, where people bought something and it was really, they just got it at such a great price, and now that rates are higher, obviously that puts pressure on things. But are you seeing that sort of asset in your market where it's like, yeah, I mean, this is still an asset, still worth a good amount of money, and it's worth more than what they paid for it?
Right. And well, I can tell you from personal experience, because I sold the home probably about 2 years ago, and I had a $100,000 haircut on that. But at the end of the day, you're right. I still made money. So that's the
Right.
trick, and their valuations are a little compressed from where we used to be. But I mean, if you're trading up, you're still going to do that, especially if you're taking advantage of a 1031 exchange to put it into a new asset and eliminate the capital gains component there. So there's still money to be made, is what I would tell you on that.
Yeah, we love the 1031. I've done a 1 to 3 this year, a 1 to 2 this year, and last year I did a 1 to 2. And so I love the 1031. So talk to us a little bit about that and what that means for your clients, because I know that you service, doctors and dentists, but I know that you also service, kind of blue collar folks as well that are looking at it and saying, hey, I'm ready to get rid of this asset, or I built my business in this location for years and years and years, and I'm ready to sell the business or even sell the building. What are the things that I need to consider? And I think a lot of people have hear the term 1031, but they really have no idea what it actually means. And so, how do you walk your clients through a 1031?
Sure. I think keeping things as simple as possible is the easiest way to communicate things. So essentially, you've got an asset that you've been paying on. We're going to sell it, and we're going to roll it over in an account using a third party who basically proves to the IRS that you're not taking money out of the equation. You put that into your next project, and you avoid the tax bill there. So really, at the end of the day, that makes you money long term is the way to think about that.
Yeah, absolutely. Anytime I can defer taxes, because it's not taxes denied, it's taxes deferred in a 1031. The other thing is too is that as Bill was talking about, it goes into something called a qualified intermediary. Basically, they're an account, or they're a firm. Usually, it's a law firm, but they're set up to then take that money into their account, hold it for 45 days until you decide what property you want to buy, but they continue holding it for up to 180 days for when you close. And if you don't qualify properties, then the 1031 breaks down. If you don't close on any of those properties in that 180-day period, then it also breaks down. Then basically you get the money at that point. You don't lose any of the money then, but then you have a massive tax liability that you have to pay. And that can be a big one. A lot of times, if it's flipping, it's income level based. If it's something where it's a product that you've owned or a property that you've owned for years and years and it's capital gain, so it might be 20 or 15% depending on what you qualify for. But those are the nightmares, right, Bill? Like you're just, I mean, I always say when I'm putting a house on the market, I'm already shopping, right? I'm already shopping for properties that are out there because I don't want to be stuck where it's like, okay, holy cow, I sold, and now I'm going to start looking at what's out there. Bad way to
Sure.
do it. Bad way to
Yeah,
do it.
and preparation's a good thing. You got to have a qualified team of people around you too. So knowing a good broker, a good lender, an insurance person, and knowing the right exchange company too. That's another avenue. But really, as long as you have all those ducks in a row, it can work very seamlessly for you. Is kind of the big picture.
I agree. What are if you so we have a broad spectrum on the Lumberjack Landlord. So we have people that are just getting into investing, people that have invested for years. What's the one piece of advice you would have for a brand new investor?
It's not as easy to find a no money into the pocket deal. Yeah, that's the first thing because that's a lot of questions, and I work with a lot of people to limit the amount of cash you need to make deals work. But there is some cash required, and that's one of the hard things. And really trying to find deals off market versus on market. You can still find stuff on the market. Don't get me wrong; it's just a little harder to get the because you make money when you buy, not when you sell. You know what I mean?
True
So if you
story.
buy it at the right price up front, that's when you're really making money. So
Yeah, I totally agree. You're absolutely making your money when you buy, not when you sell. What that really means for those of you who are newer to real estate is it's about what you're buying it for. That really does matter. That's your cost basis. So if you're buying a deal that's too expensive, a building that doesn't math out, that's what's going to end up happening to you is you're going to have a building that doesn't math out. And so that becomes very expensive to sell because likely you're going to have to sell it because when you try and exit a property, it costs about 8% now to exit between broker's fees and tax stamps and transfer fees and title insurance fees. It's about 8%. And so you have to have made at least 8% on the building just to even break even and not have to write a check at closing. Um, in your market now, so when you're advising these folks, the dentists, the doctors, what are they typically buying? Are they typically buying apartment buildings? Are they typically buying commercial buildings that they can put their businesses in? What are they typically buying through you?
yeah, that's a good question. So there's a lot of folks who like apartments for sure.
Sure.
There's a lot of people who will take an investment property and roll that into some land for us to do a freestanding structure for them, and
Nice.
that's probably the bigger chunk out of the two. But yeah, investments, industrial, small bay industrial, that's doing really well right now. A lot of flex spaces, plumbers, ACs, those guys just love those spots. So anything you can do to kick the can down the road as far as taxes go, that's where you make some money too.
Yeah, absolutely. There's nothing better than not paying taxes on a transaction because the government's done nothing to earn anything.
True, true, true.
You guys did nothing. I didn't. I guess I missed all those government people when I was there at 11 o'clock at night painting or fixing something. I always miss those guys. I'm like, hey, where are those guys that are going to come for part of my money later? Where are those guys? As you continue to kind of, what's kind of the next step for you in the Houston market? So you're doing commercial, you're spending a lot of time on 1031s, you're working with a lot of doctors and dentists and blue collar folks and giving them the opportunity to create wealth, but also in doing that where you're saying, hey, we're doing it, they're getting a pad done or they're getting more space, they buy something that has enough land where they can do a second building. Is that your kind of main play? Because what I find is most people in this business have a niche, and so the reason that they create that niche because they start doing it and they say, "Hey, this is a way to unlock a lot of value." Is that your big value play? Is trying to find these assets that have enough land to basically do a second building?
That's exactly right. Basically, we're adding structures. For instance, I'm working on a deal right now in New Jersey. It's two apartment buildings, 50 units, 25 in each. But there's
Wow.
enough space on the outside where they're going to be able to put a fourplex and an eightplex. just bumps up the total revenue afterwards. Now we have to qualify that deal off the income they got there, but anytime you can add to what you've already got and add more units, that's just more doors coming in. Now, outside of that, I've really kind of been working on hosting more events and trying to cultivate a team environment to bring more people in to get our reach out further in the Houston area. So I think that's those are the two categories that I'm working on.
Yeah, I think that's big. And I think the other thing that a lot of people miss is that a lot of times they evaluate the asset that they're looking at and they just don't look at one of the things that we talk about all the time is zoning. I think that's a big miss for a lot of people. They don't spend any time looking on zoning. And one of the biggest deals in my career was the agent had listed it as something called CMB zoning, but she missed the dash G. And the CMB said that it could be a 2 to 4 unit. The CMB dash G said that I could go 5 stories high, that it could be up to a 20 unit building. And this is on the same lot. And
But
so you know the value of that building being a 2 to 4 unit versus the value of potentially being able to put a 20 unit there. The math is
sure.
completely different. So
Yeah, well, I mean, if you're looking at the income, that just drives up the value. Yeah.
a lot, and finding land like that, one of the challenges in Houston is it's not like there's in the Houston city, kind of area, it's not like there's a bunch of undeveloped land.
We
you
are
know
running out of space, even in
you
Texas.
Yeah. And so you just have to go further and further outside the city. And so the deal that you're talking about in Jersey, same way. There's not like a bunch of land in Jersey. And so the idea is if you can buy a deal, right, with these buildings on it, and then help that with the income there to secure the debt to then build the new units, well, then that's just a massive win because then when that's all said and done, you then have the extra or added income of now 16 units on top of the 50 that you already had, and your debt service gets spread amongst all of those buildings. Do you ever condoize those buildings where you then sell off the condos to basically fund the payoff of the other asset?
I have never done that myself, no.
Mhm.
And maybe that's just I don't understand the condos well
Sure.
enough yet, but I do see the value in that for sure. And there's a lot of developers here in the Houston area who make good money doing that. So
Yeah, it's one of those things where for me, I guess I'm always torn doing something like that because if I've built something, I've built it to quality. I wanted to make it a great product in a, great area in a great neighborhood, and great product in a great area in a great neighborhood makes it really valuable and hard to replace. And so when something like that is hard to replace, land is hard in New Jersey, land is hard in New Hampshire because the town that I live in is 400 years old. It's the third oldest town in America.
well,
And then they incorporated and then made it a city and blah, blah, blah. But the interesting thing about it is we have structures in town that are 300, 250, and 300 years old. And they're still standing. They're still in great shape. They get rehabbed every 100 years or so. And I've done enough of those rehabs for this generation. But what's really interesting about that is to that point, they're not creating a bunch more land. So anytime you can get these assets with some land where you can then expand the footprint or you can add additional units, it's really, really powerful. So,
for sure.
guys, for what it's worth, Bill, any closing thoughts before we close out?
I think we've kind of talked on a lot of really hot button issues.
Sure.
Maximizing leverage with your financing, it helps your dollar go further because that's where you can earn return on money that's being lent to you. It's a key concept there, but a lot of these doctors will pick a strip center and add like a second unit where there's
Hmm.
enough square footage to qualify for an SBA loan and be able to actually collect some income on the remaining 40% of the property. So that's just another way to make yourself some dollars.
I agree. And I think that, commercial guys like yourself are really good on the financing side, certainly with your financing background. But the level of creativity that occurs on the commercial side versus the residential side is worlds apart. The number of things that they'll let you do from the commercial lending side or SBA or opportunity zones. I mean, all of these things are not really a whole lot available in the single family space. And so it really makes you that much better and kind of an elite player in that space. So, Bill, thank you so much for doing this. I know that this was a ton of new information that a lot of our folks just aren't used to hearing or certainly haven't heard it enough. So I appreciate you spending the time with us, guys. Make sure you take the time, go out and follow Bill on his channel. It's absolutely awesome. Gives you a ton of information on being a commercial agent. Obviously, was a banker on the other side, to mortgage lender on the other side as well. Lots of information there. And maybe today isn't the time for you to do commercial, but it's always important to be broadening your scope, getting better, understanding general concepts. And I think Bill does a phenomenal job at taking things to an advanced level. After all, he's working with doctors and lawyers and dentists and all the such. And the fact of the matter is they very often have more income than we do to make that investment. And so I want to see what they're doing because that might be an investment that's worth it for me. So, Bill, thanks again. I appreciate you taking the time, and we will see you guys in the next one. Thanks so much.
Okay, all right. Well, hey, everybody, thanks for tuning in. I'm really excited for today's conversation because I'm joined by a fellow real estate pro who brings a no-nonsense, boots on the ground perspective to investing. No, none other than the Lumberjack Landlord right here.
Super
Doing it.
pumped to be with you. This is
Well,
awesome.
thanks for having me, man.
Sure.
You bring so much experience to the group. I know that you invested in a lot of units. You have some experience in the tech space.
Yeah.
Tell me a little more about you, man. What can my viewers learn from you?
Yeah, so you can learn a lot of what not to do because I spent 24 years doing that. So if you want to know what not to do and not how to cost yourself millions of dollars, follow me now because I've learned those lessons. But I'm a ninth grade dropout, worked my way through everything, got into tech when I was about 19 years old, and not writing software, but selling it. And so worked my way up through the executive ranks. And right around the time of the dot-com bomb, oh 01, oh 02, I lost everything that I had saved up. The 2 years, almost 3 years of money that I'd saved up that was in the market, I lost it all. And I said, there's just got to be a better way. There's got to be a better way. There's got to be something better to do where my capital isn't so at risk. And so I started looking, and it's hard to find assets that you get to own that appreciate in value. And oh, yeah, P.S., by the way, they also throw off income, not to mention the IRS deems that as passive. So I get to have a bunch of cool write offs and things like that. So there's only one real thing that fits that category, and that's real estate. So I was like, well, real estate it is. And then I just started learning about real estate. My mom was an agent, but she, honestly wasn't an amazing agent. She was just a typical, I'll sell you a house because you're looking to buy one. Didn't really work with investors. And so that was kind of that. So I started just trying to, and this was before YouTube University. This was before you had the concept of people that mentored. You hear that word about 9,000 times a day now.
Yeah.
And so it was just, I just had to figure it out. And so what I did at that point was I just started calling agents and saying, hey, this is what I'm looking for. This is what I'm trying to do. And my very first deal was I wanted to move into a condo. I couldn't qualify for it myself. I said to the mortgage broker, what you used to be. And he goes, well, why don't you get a roommate? And I go, how's that going to help me? And he goes, well, you can give them a lease. They can pay you rent. And then we get to count that towards the income. I was like, what was that?
Mm.
And he,
Tell
and
me
he goes,
more.
yeah. I was like, tell me more, Nostradamus. Tell me more. I need to know. I need to know your wild ways, your wizardry ways. And so he said, yeah, that's exactly how we do it. He's like, so he said, you make enough money to qualify. You got the down payment. He's like, you make enough money to cover about 1,700 bucks a month, 1,800 bucks a month with the condo fees and all the other stuff that's in there. And he goes, but you can't be more than that. And I said, okay, well, what's the nut all in? And he's like, yeah, you're about 2,400, 2,500. And he goes, so you need to find somebody that's willing to pay at least 700 bucks for that other spot. And he goes, and even that's cutting it a little bit close. And I said, okay. So went in the quest and reached out through the friend network. And I was like, who wants to live in this place? And one guy's like, oh my word, you're going to live there. And I was like, well, you're going to live there too. And so he came and he saw the place and he's like, yeah, dude, he's like, I'm paying 1,000 bucks a month for my place right now. I'll pay you that to live here instead. And I go, you're paying 1,000 bucks a month to live in that dump? I think 1,200's more fair. And he goes, what? I go, no, fine. 1,000 bucks is fine. But that signing a lease with him, getting him on there to pay the 1,000 bucks a month, put me in a position where I was then only going to be $1,400 out of pocket to live in a, $350,000 condo at the time on the water. So sign me up
Pretty good deal.
twice.
Yeah.
Yeah. Yeah.
So yeah, I know through our previous conversations, you mentioned you live in like a little historic area in
Yeah.
Massachusetts. There are a lot of old homes, and you've been part of some renovation projects. Can
Sure.
you give us some insights on what not to do for
Oh my
rehabbing an older building?
Yeah, don't do it. It's the worst. It's funny because all the crews around here, there literally is a difference of crew. There's a new construction crew and then there's a rehab crew. They're completely different. The skill sets are completely different. The amount of work that they get done on the daily basis is completely different. But yeah, so I've done stuff, helped on projects and things like that in Massachusetts. That's where I first started out, and then I went to New Hampshire because there's no income tax and there's no sales tax. And they're because of
Nice.
that, the state government's really aligned with landlords because they want their taxes paid. So when a tenant doesn't pay their rent, they're like, "Hey, yeah, we're not going to make it difficult for you to get them out. They've got 3 weeks, and then we'll let you kick them out basically if they don't get a hearing." So I've done a bunch of projects. What most people laugh about, Houston's an amazing city. I've got family there, but a lot of the stock that's been built there has been built after in the '80s and until now. So it's really interesting is most people say, yeah, I won't touch anything that wasn't built, after 1980. I won't do anything before that. And my joke is I won't touch anything that was built before 1880 because all of our stuff is ancient. So we have those old, 8-inch chestnut beams in our buildings. We have literally trees that have just been debarked and delimbed, and those are the supporting structures in the basements of some of these buildings.
Hmm.
So it's cool when you find that. But yeah, the thing to always look at, when you're looking at investing in real estate is the big expensive stuff. The roof, the heating system, up in our area because it's so old, asbestos and things like that, like some of those nasty chemicals, those can be a big thing up here. But we have foundations up here that you guys don't really have down there where our
Mhm.
basements are wide open. Almost all of them leak, and so, knowing that you have a good foundation, knowing that you have a good roof, knowing that you have a good heating system. And then it's just some of the other big, more expensive stuff like kitchens and baths, making sure that those are good. And then up here, we also have a weird thing because for a long time, they thought this was a good idea. They made our sewer pipes out of clay.
Hmm.
Thought that was a super idea. And
That's
then
interesting. It seems
the
like
way that
that might break at some point.
yeah, it does. It does. It does often actually. And
Okay.
so then they got away from the clay, but what they did to attach the clay to the house was they used something called Bermico, which is like orange wrap, but it's literally paper dipped in tar, and that's what's used to connect the house to the main line. What's
Wow.
hilarious is why would you use paper dipped in tar to then carry water through forever? That was just a hugely dumb idea.
Yeah.
Um, so now we're starting to see a lot of the cities where that was installed 40 and 50 and 55 years ago. We're starting to see that fail for cities. So now it's really being pushed. So when you're doing stuff up in New England, when you're looking at stuff like that, those are the big things you want to look at. You want to look at roof, you want to look at foundation, you want to look at heating and air conditioning systems, and you want to look at that plumbing from the house to the street because the typical cost there is probably about 8 to 10,000 bucks to dig that up, replace that line, and know that you're actually good. And there's nothing worse than a sewer backup in your house.
I can't imagine that being a pleasant experience for sure. Yeah.
It is not conducive to a happy tenant.
Oh man, you're just a wealth of insight, man. I
I
really want
appreciate
to thank you for taking the time. Thank you for doing this interview with me, promoting my channel. I mean,
it.
it's
Sure.
you reached out to me. I mean,
I
you're
did.
obviously very wealthy and doing what you do. Thank you so much for your time. I really appreciate it. I'm
Oh man, it's my
sure I'm going to
pleasure.
see more viewership too out of it. So thanks.
I appreciate it, Bill. Honestly, we want to grow the community. We want to make people better. I appreciate that you're doing it the right way. I appreciate that you've been doing it for over 20 years. So you
Crazy.
lived through the downturn. I think we're in for a downturn. I think we're in for some adjustments.
Sure.
And that's not a thing to be scared of. It creates opportunity, but it only creates opportunity for people that are informed and have done the work. So if you can get informed, if you can done the work, if you follow somebody like Bill, if you follow somebody like myself, get in communities where you can learn, and it's absolutely going to change your future because you are armed with that much more information than the next guy, and then you can do that many more things than the next investor can, and that's what creates more opportunity for you and then making more money.
You're the man, man. I love it.
Man, Bill, my pleasure. I appreciate you having me on, and yeah, we'll do this again sometime soon.
Yeah, man, this was awesome. I really appreciate you. Have a good day, bud.
Thanks, Bill. Take care.
All right, bye-bye.